Hello, welcome to Market Views, a podcast series of Open Business Council and JPFS, where we discuss financial and trading news, interviews with key personalities, and engage with our audience. Now, today we have a special guest, Chris Butler, who is the CIO of Cromwell FX, and we've got Peter Christensen. Hello, gentlemen.
Hello.
Chris, can you tell us your views about the strategy behind Cromwell FX and what investors can expect if they do invest in it? And how long has the program been live, and what have you experienced in terms of your historical net returns?
Absolutely. It's obviously, firstly, a pleasure to be here today and to discuss the Cromwell FX program. So the program is a classic breakout strategy where we look to take advantage of the momentum within the FX market. So what we're looking to do is deliver superior risk-adjusted returns with a low correlation or zero correlation to the broader market, stocks, commodities, etc. So what we're delivering is a return of about 12% per annum, and we've been live for 7 years, mostly with founders' money. But 3 years ago, we joined forces with Peter and JPFS to deliver a sort of more robust product and to leverage their experience and their network to bring our product to a bigger marketplace.
In terms of the 22 currency pairs that you use in your strategy, can you tell us a little bit about how you manage the risk?
Firstly, from a program perspective, every position that we take is managed in three ways. We have a stop loss, we have a take profit, and we have what's called a volatility adjusted position. So it means that for a move to either the stop loss or the take profit, whatever the currency pair is, we are risking the same amount of capital. So whether it be Aussie dollar, sterling yen, or dollar Singapore, we will always ensure that the position that we take for one standard deviation move risks the same amount of capital. So that way that the investor, their risk management is inbred within the system itself. So, and then joining forces with JPFS gives us more access to a customer base, gives us also the regulatory coverage that we need in order to deliver this product to the market. I'm sure Peter will be able to touch on sort of the regulation side of things.
So, Peter, who is the custodian and what security do investors have that they, with regards to their money and their investment?
We use, as a custodian, we use SGT Market. It was established in 2006, so it's not a spring chicken. They have the FSC license. They also have indemnity insurance with one of the large insurance company in the world. The investors can see their cash balance on the account. They can also follow the performance hour by hour. They can follow it day by day and, of course, monthly and yearly. What we've tried to do is to make it as transparent as possible. We also made sure that there's a fast liquidity. You can get into the program on a weekly basis, and you can actually get out of the program also on a weekly basis. If in special cases an investor needs the money urgently, we always find solutions. Let's not put everything into boxes and say, no, you can't do this. Let's find solutions. And that's what we do.
I understand.
So to touch on that, one of the key things that the model does is that we're a classic breakout strategy, but we have an overlay of processes that allow a trade to happen. So it has to fit a certain criteria, which are back tested over the last 20 years. And what it means is that for a trade to actually happen, it has to satisfy a certain set of conditions, and then the market has to reach a certain price for us to want to take that position. Mm-hmm. So there's often a lot of time when we don't actually hold a position because the market isn't conducive for us statistically to make money from it.
Mm-hmm. So how long has this program been live, and what has been your historical net results?
So the program's been live for the last 7 years. We're averaging 12 to 13% per annum with a volatility of around about 5-6%. Our worst drawdown is 4.5%. And we've been with JPFS for the last 2.5 years.
Peter, what are the all-in costs of investing in Cromwell FX? And how quickly can clients invest and withdraw the money?
I'm happy to actually answer that question, because the way that our structure works and the way that we have the setup means that we've been able to actually take all cost away from the investor, which means it doesn't matter if you got 5,000 or you got 500,000. The cost will be the same, which means zero for open the account, for deposit the money into Cromwell FX, for instance, or take out the money. So there is no cost for the investor itself. And that's been our whole vision, to actually democratize the professional market.
So in terms of the costs of investing, so there must be a performance fee which is built into the program.
Yeah, of course there is. Again, there is a cost, but there's no administration cost in itself. There is a cost for actually having a person like Chris and his team actually running the program and so forth. But that's a normal, I would say, a normal cost for a hedge fund manager or for an investment manager. There is a management fees, or there can be a management fees, but there could also be a performance fee, which there normally is. But all the other small little costs for setting up accounts, depositing, and all these things, there is no cost in itself. There's no administration fees, which there normally is for certain programs. We try to take all that away to make sure that the minor investors or ordinary investors have the same conditions as a large investor.
Brilliant. So basically, institutional investors and retail investors are treated the same within the program.
Correct.
That's very encouraging. So in terms of the advantages of people investing in Cromwell FX via trade makers and SGT, can you just describe to us a little bit about what are these advantages?
Yeah. Now, to say one thing, to have managers like Chris and his team and Cromwell FX, we're pretty freaking proud of it. Normally, you wouldn't be able to get in touch with people like Chris and his team if you don't have $1, $2, or $3, or $4, or $500,000. So that also means you'll have to go to, we'd call it maybe tier 2, tier 3 managers. We've just made it possible for ordinary investors to be managed and have their funds managed by professionals. Mm-hmm. And that's it. So the advantage is you now can actually have a total savings of, let's say, $100,000. But you can now actually allocate that $100,000 into several different programs to diversify your investments. So that's, I would say, that is the advantage. Faster liquidity, easy to open the account. Very, very simple.
So, Chris, I've looked at the performance, and it's quite interesting that in a low interest rate environment, you had spectacular returns. And the volatility of interest rates recently has probably been a little bit of a challenge for these type of strategies. Can you tell us a little bit more of how a quantitative and systematic strategy can benefit from a rising interest rate environment?
So what we can do is in the low interest rate environment, we went through a period of what you call a classic asset bubble. Stocks were rampant as people invested free cash into the stock market, and we, as an FX manager, also benefited in terms of performance. I'd say in the last 6 to 9 months, it's been more of a challenge in terms of the changing environment that we've been through. But what we're looking for is now we're sort of beginning to come out the end of that cycle, and the performances we're now seeing is coming back in, and we're beginning to see the stability back into the market that people like myself as a quantitative manager want to see. We're looking for sustained trends. We're looking for movement in the market. What we don't like is things that move and then move back the other way very quickly again. We're looking for that level of sustainability in a trend that we can build a position into and take advantage. One of the key things we do is we don't just buy Aussie dollar and then put everything on black. It's a building position, and as we're building the position, as the market's going our way, we're taking the position off in terms of take profits of the earlier entries. So we're always managing a core position once we start building into that. And then what will happen is, as the time progresses, that as the trend begins to exhaust itself, our filters will begin to notice that the market is beginning to exhaust itself and stop taking new positions, and we'll just manage the position that we're left with.
In terms of assets under management, can you tell us how big the Cromwell FX fund is?
Absolutely. So we're currently running around about $2.5 million. This is all private money. And this is one of the key things for us joining forces with Peter and his team over the last 2 years, that we want to be able to bring our product to a wider market. People are more market and money savvy these days, and buying trackers or buying indexes isn't what people want anymore. They want access to what the high net worth individuals get access to. And this is a key element for us to be able to open up our product to that kind of investor.
I mean, it's a very interesting product, given the fact that, as you said, your return is around 11, 12%, and your volatility is around 5 or 6%, which means that you're getting a good bang for your buck.
Absolutely. And as Peter suggested, we're not always invested, which is the key element. We're not a trend follower where we're always holding a position. We're very choosy about the positions we take, and we'll always take a position that we feel that has the best opportunity for a take profit.
Which is also why we've been invested since, last 2.5 years. We always invest in everything that we actually get involved with. And we've been there with Chris for the last 2.5 years. And it's taking a bit of time to get to where we are. So I have to say, Chris, thanks a lot for your patience. And you were one of the first one actually believing in the visions that we had in JP and Trademakers and SGT. So I really appreciate, and we'll stay there for a long, long time.
Fantastic.
Chris and Peter, thank you very much for talking a little bit today about foreign exchange strategies, in particular with Cromwell FX.
Thanks for having us.
Thank you, Chris and Peter, and we very much look forward to our regular podcast on market views. Do follow us on jpfs.com and openbusinesscouncil.org. And please engage with us and use these links as well as on LinkedIn and Twitter. And do send us questions for our next episode. So goodbye, and thank you for watching.